What's up guys, Windfall here, back with another trading video, and today I'm going to be reviewing my trades from June 28th, 2022. The first trade that I'm going to be going over is a Microsoft pullback for buying puts. It's a very nice technical setup. We have market in a clear downtrend with lower highs and lower lows. You see the market flow. And then we see this nice rally, this big pullback, which puts in a lower high relative to this high we see here. This is a nice pullback trade that we can enter on. We also look at the MACD indicator, which creates a divergence. We see compared to this high, a higher high is created on this momentum indicator. Meanwhile, on the price action, we actually get a lower high here, which is very good for a bear setup because it is indicating that the bullish momentum is fading. So for this trade, I drew a trend line connecting the lows of this pullback, and I entered on this day here, the 28th. It was a nice breakout from the pullback. The next day, it actually ended up reversing, and I sold in the morning. So I gave back quite a bit of profits. I would say I gave back over 50% of my contract's value in gains. Here I bought a Microsoft put, 245 put for $435, and I also bought a 250 put for $550. I ended up selling on the day where it started consolidating and it wasn't a clean swing anymore. I sold one for $625 and the other for $485. For my Microsoft trade, I profited $125. Next trade setup was a pullback in US oil where I bought calls. So I bought 3 US oil calls, 90 strike, for $167 a contract on the 27th, which was this day right here. It retained market structure. Here's the last recent swing low, which put in a low at $78.45. A higher low is put in here by the market. This low here is only $78.49. So this shows that the market structure is intact. I connected the highs of these bars here for the pullback. We see this retracement here, almost making a lower low, but market holds. And here on the 27th, we break out of the pullback and I enter with calls. The next day is great, still holding my position. On the next day, we get a reversal. I sold one of my calls for $258, but then as the market started reversing and it wasn't a clean swing anymore, I exited my position. I ended up selling my 2 other calls for $216, and I gave back my profits because it wasn't a clean swing anymore. So I bought 3 US oil calls for $167 a contract, a net profit of $189. Overall, I gained about 5% on my portfolio, but it sucks. I was up 10% yesterday, and that's the psychology part of trading. Even though I made money in the end, and 5% is a great profit, it's just mentally hurting and taxing to give back 50% of your gains. But at the end of the day, profit is still profit, and it all comes down to risk management. It's not about managing your profits, it's about managing your risks. Thanks guys for watching this video, and stay tuned for the next trading recap.